NIO Inc., New York Stock Exchange, NIO, started Friday's trading session with a drop below $35, but has since been on the mend, trying to close the gap and change hands at $35.20, a 1% drop. Hi Fixers, welcome to Fix Your Finances, Build Financial Wealth. If you want to build your financial wealth and fill your mind with the right information, make sure to hit the like button and subscribe for us to provide you with more valuable content. Let's get to it. ARK Invest, Cathie Wood's company, has had a difficult few weeks. According to Morningstar numbers, her flagship strategy, the $22.1 billion ARK Innovation ETF, ARKK, had dropped 7.8% year-to-date as of Wednesday, trailing 99% of its category peers. The fund's poor performance contrasts with its 152.52% return last year, which outperformed 99% of its peers, according to Morningstar results. In bull markets, buyers beget buying. Such was the case for ARK in 2020, said Doug Cass, president of Seabreeze Partners Management, in a tweet on Thursday. But in bear markets, sellers beget selling. Such might be the case for ARK in 2021. Wood, as normal, is unfazed. She said in a Wednesday panel organized by CFA Institute China that her projected return for ARK has increased to roughly 25% from 15% per year over the next 5 years during this risk-off period. While our companies are sacrificing right now, foregoing short-term profits, investing aggressively, Wood said, we believe that the payoff will take place within 5 years. As a result, you have both exponential sales growth and a margin catch-up, which can result in some very powerful returns over time. Wood's strong belief in creativity and exponential growth has made her a global icon as well as a superstar investor in the United States. According to Bloomberg, she has been given the nickname Money Tree in South Korea. According to posts on the Twitter-like website Weibo, she has been dubbed the Queen of the Bull Market in China. Though ARK has primarily backed disruptive technologies in the United States, investors wonder if the company will shift its attention to China and the Asia-Pacific in the future. ARK employed analyst Yulong Kui in September to cover next-generation innovation trends in Asia. Wood has previously expressed concerns about how increased corporate and capital gains taxes could push innovation offshore in previous webinars. It would be quite concerning if we were back in a rising tax environment, especially given the competition that we're now seeing from Asia, especially on the innovation front, which is surprising to some. Wood said in a December Markets Update webinar, if we start raising tax rates, I think a lot of innovation will move offshore. President Joe Biden is becoming more serious about raising tax rates on capital gains, larger businesses, and high earners, which could justify Wood's concern. ARK has recently increased its exposure to Chinese stocks. It started a stake in Pinduoduo, a Chinese e-commerce giant, last week by purchasing 196,517 shares worth $31.25 million. Baidu, JD.com, Tencent, and Alibaba are among the Chinese tech giants owned by ARK. In terms of fintech, we've heard a lot from China, Wood said on the CFA Institute webinar. In truth, I have to say that seeing WeChat Pay and Alipay, their mobile payments, explode in 2017 opened our eyes. I couldn't believe the figures when I first saw them, but they demonstrated how important the particular development would be for the developing world. Indeed, Wood said that she had kept Chinese developments on her radar since speaking on a panel at the 2016 World Economic Forum in China. We know that the Chinese government places a high value on creativity, she said. As a result, we're keeping a close eye on Chinese creativity. In particular, Wood stated that China is making strides in each of the 5 innovation platforms that ARK invests in: artificial intelligence, robotics, energy storage, DNA sequencing, and blockchain technology. According to Wood, China seemed to be behind in DNA sequencing for years because Illumina had the lion's share of the market, with its machine sequencing 90% of all base pairs of DNA sequences in the world. That is changing, and it's changing because Illumina, an American company, did not follow the cost curve aggressively down and has opened the market to competition, she said. I think the lesson there is, if a company in the lead in technology does not move down the cost curve aggressively enough, other companies will come in and take its place. Wood claims that China's demographic factors, which favor an aging, elderly population, are also propelling collaborative robots forward. Back in 1994, when I first visited China, the plan was to hire as many people as possible with no robots, she said. We're seeing a lot of robots and more efficiency now as a result of demographic shifts, which is good for the entire economy. She's also taken aback by China's decision to let Tesla into the country without a local manufacturer. International companies that want to do business in China usually have to form a joint venture with a local partner, but Tesla is the country's only foreign-owned automaker. I have been very impressed by China's focus on electric vehicles, both from an environmental point of view and a technology point of view, she said, adding that her team is looking at Chinese EV companies like NIO, XPeng, and Alibaba-backed AutoX. She claims that China has not made as much progress in artificial intelligence as the United States, but that the government and private sector will help the industry grow quickly. Meanwhile, with the launch of the digital RMB, the country's blockchain technology growth is still in flux. Although having a digital RMB will allow blockchain technology to proliferate throughout China. Not participating, however, in Bitcoin will probably mean that the digital RMB will be limited to China, she said. We shall see. This is a very fluid situation. It changes every day. NIO earnings and fundamental analysis. NIO lags on main earnings and other fundamental metrics. It's a young, fast-growing business that's always trying to make a profit. On a scale of A+ to worst E, NIO stock has an EPS rating of 50 out of 99 and an SMR rating of D. The earnings per share ranking compares the company's earnings performance to that of other firms. Sales growth, profit margins, and return on equity are all factors in the SMR ranking. NIO recorded a larger than expected fourth quarter loss on March 1st. NIO sales more than doubled to $1.02 billion, resulting in a 14-cent loss per share. NIO saw vehicle margins increase and cash nearly double from quarter to quarter. While profits are still elusive, losses are shrinking. Analysis predicted NIO would cut its losses in 2021 to 37% per share, down from 66 cents in 2020. According to Zacks Investment Research, revenue will more than double to $5.21 billion in 2021. In 2022, it is projected to lose 10 cents per share as revenue increases by 81%. According to Zacks, 5 Wall Street analysts recommend NIO stock as a buy, 4 recommend it as a hold, and none recommend it as a sell. NIO sold 43,728 electric vehicles in 2021, more than double the previous year's total. NIO was on target to produce 100,000 chips in 2021, according to Deutsche Bank analysis on March 2nd, but that was before the chip shortage escalated. Due to the shortage, NIO suspended production at one of its factories for 5 days in late March. NIO isn't the only one who feels this way. Tesla, Volkswagen, General Motors, and Ford have all been impacted by chip shortages. NIO's profits fell in the first quarter of 2020 as a result of the coronavirus outbreak in China, which held customers away. However, profits rapidly recovered, more than doubling over the course of the year. NIO delivered 20,060 premium electric SUVs in the first quarter, up 423% year-over-year. Li Auto and XPeng, 2 other Chinese EV startups, increased their Q1 revenue by 333% and 487% respectively. However, EV rivalry is heating up. Tesla and Volkswagen have begun selling Model Ys and ID.4s manufactured in China to local car buyers. Both EVs are competitors to NIO's recent and common electric crossover, the EC6. In addition, Ford has started selling its latest Mustang Mach-E electric crossover in China. Furthermore, Geely, a Chinese automaker, and Baidu, a software company, intend to collaborate on the development of electric vehicles. Foxconn, an Apple supplier, is also interested in the electric vehicle industry. Zeekr is a new luxury electric vehicle brand introduced by Geely. Meanwhile, China's BYD has launched the Han electric sedan, which is aimed squarely at the luxury market. BYD is one of the world's largest EV and battery manufacturers, with Warren Buffett's Berkshire Hathaway backing. NIO is ramping up production in China with plans to launch in Europe later this year. Tesla is also looking to grow in Europe, which last year overtook China in EV sales. Investing in Chinese firms carries a significant risk of regulatory instability. At the start of 2021, China cut electric vehicle subsidies by 20%, a development that could have an effect on NIO. Although the government is attempting to wean consumers off the sales-boosting subsidies, previous cuts have delayed EV transactions. Baidu and Tencent are among NIO's backers. Alibaba has also invested in Xpeng. Fundamentally, NIO's financial situation is improving after debt and liquidity concerns slammed the stock. NIO is reducing losses while increasing top-line revenue. NIO's and total EV sales seem to have a bright future. Following strong sales in China, NIO's plans to expand globally promise even more room for expansion. It might take some time for a new trend or buy point to appear. After a good rally last year, its RS line is lagging. However, its recent recovery from the main support level is encouraging. Let us know in the comments below if you will be buying NIO, and make sure to subscribe and follow us on Instagram at FixYourFinances_. See you next time at Fix Your Finances.